Wall Street just got caught in a tug-of-war between AI euphoria and the drums of war in the Middle East. And your portfolio, it's right in the crossfire. Let's break down what just happened. The S&P 500 slipped 0.3%, dropping to 7,337. The Nasdaq barely flinched, down just 13 basis points to 25,806. But the Dow took the hardest punch, falling 0.6%, closing just below 49,600. And here's the number that should really grab your attention. The 10-year Treasury Yield spiked nearly 1% in a single session, climbing to 4.39. That is a big move. That is bond traders screaming that something has changed. So what's going on? Two massive stories are colliding right now. On one side, you have Iran. Doubts are swirling about whether a U.S. peace deal will actually hold. A senior Iranian official flat-out said Tehran won't let Washington reopen the Strait of Hormuz with, quote, an unrealistic plan. Trump is out there predicting any conflict will be over quickly, but the market isn't buying that confidence. Oil prices surged, and here's the jaw-dropping part. Reuters is reporting that oil price bets placed ahead of Iran war headlines totaled $7 billion. $7 billion. Somebody knew something. Or at least somebody was betting like they did. That oil spike is exactly what dragged the Dow down and sent Treasury yields climbing. Higher energy costs mean stickier inflation. Stickier inflation means the Fed stays hawkish longer. And that yield move tells you the bond market is already pricing that in. But here's the kicker. On the other side of this chaos, AI stocks are absolutely on fire. Datadog reported a blowout quarter and its stock exploded 31% in a single day. That dragged up names like Snowflake and MongoDB with it. Nvidia and Tesla held strong even as the broader market sold off. The AI trade isn't just alive, it's accelerating, and it's becoming a shelter from geopolitical storms. Think about it. The S&P 500 and Nasdaq just snapped a 2-day record closing streak. We were at all-time highs, and the pullback, barely a scratch on the Nasdaq. That tells you the mega-cap tech and AI names are doing the heavy lifting while everything else wobbles. Now tomorrow is absolutely loaded. We get non-farm payrolls, we get the unemployment rate, and we get the preliminary Michigan consumer sentiment reading. 3 heavyweight reports in one morning. If jobs come in hot, that yield spike today could be just the appetizer. If they come in soft, we might see a relief rally. Either way, volatility is on the menu. So what's the bottom line? The market is sitting at a fork in the road. Geopolitical risk is rising. Bond yields are flashing warning signs. But AI momentum is so powerful it's holding the indexes near record highs. The question isn't whether you're bullish or bearish. The question is whether you're positioned for both outcomes. Sentiment right now sits at about 68 out of 100. That's greed territory. Not extreme greed, but enough to tell you that complacency is creeping in right when headlines are getting dangerous. Stay sharp out there. If this kind of daily breakdown helps you make sense of the madness, smash that subscribe button so you never miss a session.